Let's talk some oil, because that's what everybody's doing. You know, we're only a few days in the second Trump administration. Like everybody else, I got to figure out what all these executive orders flying around mean for particular industries. For example, the oil service space seems like an obvious winner, right? I mean, think SLB or Halliburton. As the president signed an executive order on Monday that basically removes virtually all barriers to drilling. Of course, that doesn't mean the producers will just drill, baby, drill, though. As our go-to energy expert, Rusty Brazil of RBN Energy, explained on the show last night, Trump may want production. I don't blame him once prices lower, but it's up to the oil and gas companies to actually do the producing. And they know that more supply translates into lower prices. Sell. Thankfully, both of the major oil service places, SLB and Halliburton, have now reported their fourth quarter results. SLB reported last week. Halliburton turned in numbers just yesterday morning. So we've got a better sense of what's happening in this industry, because there might be some real value here. First, let's talk about SLB. Now, it's formerly known as Schlumberger, which is the larger and more international of the two. The stock took off last Friday in response to a strong quarter. SLB posted modest top and bottom line beats. Their North American business delivered the most upside, comfortably ahead of their expectations. Their larger international business was in line, thanks to some softness in Latin America. But the real story from SLB, as is typically the case, was management's commentary about the future, which I'm going to have to classify as cautious, but not terrible. One analyst from J.P. Morgan called it better than feared, and that sounds about right. At least to me, CEO Olivier Lepouche, he noted that in the back half of 2024, his customers, meaning the oil and gas producers, quote, adopted a more cautious approach, primarily driven by concerns of an oversupplied oil market, end quote. But then he added, quote, although these concerns persist, we anticipate the oil supply imbalance will gradually abate, end quote, citing global economic growth and a heightened focus of energy security coupled with rising energy demand from AI and data centers. Yes! For this year specifically, Lepouche said, quote, we expect global upstream investment to be steady in 2025 compared to 2024, end quote. For the smaller North American side of the business, he sounded less optimistic, explaining that oil and gas activity is expected to decline due to lower publicly announced capex in U.S. land, higher drilling efficiency, and a slow recovery in gas until LNG capacity expansions are resolved. Now, the stock still got a nice pop on these numbers in that commentary. Gained 6% last Friday because the results were better than feared. Keep in mind, this is a stock that fell 26% in 2024. But, you know, as I see it, the quarter was neutral at best, especially for the North American side of the business. SLB's already given back most of last Friday's gains this week, and that seems about right after a quarter that was not terrible, but also wasn't particularly encouraging. So what about Halliburton, which reported yesterday morning? All right, well, HAL stock is simply beaten down, having fallen almost 25% last year. It didn't get an SLB-style bounce yesterday. In fact, it lost another 3.6%, and then today it got hit for another 1.8%. Why? Well, Halliburton had mixed headline numbers. Revenue was down 2% year over year, slightly lower than expected, while the earnings only beat estimates by a penny. Halliburton is much more levered to North America than SLB, and right now that's hurting them, as North American revenue fell 7%. Even as the international business was up 3%, but North America is where the action is for these guys. Looking forward, Halliburton says it expects flat international revenues in 2025, with Halliburton CEO Jeff Miller saying, quote, growth in most international markets offset by activity reduction in Mexico, end quote. Other than Mexico, the rest of the world is actually looking good for them. For North America, Halliburton actually sounded pretty optimistic for the long term, but not necessarily for this year. For 2025, Halliburton expects North America to be down low to mid-single digits from last year. That's not good. Miller added that they're taking a real hit on pricing in America. That's even worse. Longer term, though, he's much more sanguine. Miller noted that after conceding and giving those price breaks I just mentioned, Halliburton's now sold out with all of its fleets working under committed or contracted programs. Good. He also mentioned some new technologies, including Zeus, the company's new electric fracturing pumping unit. That's a fracking tool. And this is the part that I like best. Miller explained, quote, I believe the next catalyzing inflection from North America's services will be up, not down. I believe the most pressing energy problem in North America today is the power shortage driven by the electrification and power demand for AI. And this cannot be solved without significant amounts of natural gas, end quote. I totally agree with him. He goes on to say, this is on top of the expected increases in LNG exports. These are all very good things for Halliburton in 2025. Same story as SLB. I think it's compelling, even if it will take time to play out. So then let's ask ourselves, are the oil service plays a good bet under the new Trump administration? My short answer is not quite yet. Could be soon. Looking at just SLB and HAL, that's what we used to call it, SLB on the trading desk, I'm underwhelmed by the results from the fourth quarter and their outlooks for 2025. I'm also tempered by Rusty Braziel's comments last night because getting more production here in the U.S. might not be as simple as drill, baby, drill. A declaration from the White House won't cut it. You know what? I'm going to go a step further. As President Trump's main goal in energy seems to be getting prices down, which would be great for consumers. But as I said at the top of the show, it would be terrible for the oil and gas industry. Longer term, say over the next 4 years, I certainly think the oil service cohort could make a comeback. The rollback of regulations will make it easier to drill. Once the oil and gas companies decide they want to drill, it could make a huge difference. Plus, while I think the oil service plays could remain challenged for a while, maybe the entire year, these stocks right now are incredibly cheap. SLB, 12 times this year's earnings, 2.7% yield. Halliburton, 10 times with a 2.4% yield. That said, it's hard to predict when these stocks are going to bottom. Given how cheap they are, though, I could count on starting a small position now as long as you prepare to go slowly, buy more on the way down, and accept that these are value plays, deep value. Bottom line, the whole oil and gas industry loves the drill, baby, drill of White House, but doesn't automatically take up the oil service stocks, or the producers for that matter. After listening to what SLB and Halliburton had to say over the past week, considering the macro environment and the new geopolitical factors, I think their stocks can work over time, just perhaps not as necessarily right now. Still, given how cheap they are, I can't blame anyone for wanting to pick at them down here. Just please, I'm begging you, buy them gradually, because my bet is we'll get more near-term weakness as American oil companies hold back to keep prices high and profits robust. Let's go to Dawn in California. Dawn.
Booyah, Jim. I'm a three-time investment club member.
Yes, Jim. I hope you like to talk today.
Thank you. Great. I loved our morning meeting. Thank you for inspiring me to take control of my finances and learn more about investing.
That's it. We are trying to we're trying to teach. We have a menu of stocks. You can choose among them. We're trying to teach you how to identify value, teach you how to do it right. And I thank Dawn for seeing exactly what we're doing. And let's go to work.
Jim, if I can, I would just like to send a huge thank you to all the firefighters working tirelessly in California to protect our communities from the fires.
I totally agree. And what a great bunch of people. We've got someone who's a relative in there. And all I can tell you is that they are fighting a war. There's a war.
Yes, sir. Jim, 3 separate times I wanted to pull the trigger on this leading integrated power company. Is it too late? The company is VST, Vistra.
You know what, Dawn? I have to tell you, it has gone up so much. Maybe if it comes down, you can buy a little, but it is just on fire. I can't countenance buying it here. I am afraid I'll hurt you, but I do appreciate your comments, and I also think I echo your what you're saying about the firefighters. Let's go to Craig in Ohio. Craig.
Hey, Jim, a big booyah from Southeast Ohio.
Yeah.
My stock is AES Corporation, and my old methodology for utility companies, I've always picked up utility companies like AEP or Southern, when their yield is around 5%. So this one, as you probably know, yields over 6%, but it can't seem to get out of its way. I rode it all the way up to the 20s, and now I'm actually below my cost, which I should have stuck with it.
Here's what I want to do. I got to get them on, because I've got to tell you, when you see a utility yielding 6%, does renewables, there's something very wrong with it. And I'm going to say don't touch it. Let's find out more about AES. It is out of whack with the rest of the utilities. All right. After hearing what Halliburton and SLB had to say over the past week, I think their stocks going to work over time. I wanted to do some value stocks, not just the Vistras, not just the Constellations, some things that represent real value. And HAL and SLB do that. Now, we've got much more Mad Money ahead, including my look at another interesting stock that you asked about called Alignment Healthcare. Does it deserve a spot in your portfolio? Then what should you make of the latest headlines about tech billionaires? I'm breaking down the action, the intersection of Wall Street and Washington. Of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.